Good morning and welcome to Tuesday. I'm Joe Jaquin, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And, you know, we do a little thing that we like to call wealth insurance. Yes, you have life insurance. You have mortgage insurance, car insurance, rental insurance. But nobody ever talks about wealth insurance. Well, that's what we do. When you talk about what is wealth insurance, well, simply put, it's a hedge against all your other assets that are tied to the debt markets and paper money, right? It's the money that's in your bank account. Because what a lot of people don't realize is that money that's in that bank account that's got your name on it. Matter of fact, they send you the statements. And if you're old enough, which I'm getting there, they'll even send you a Social Security statement, right? It's got your name on it. It's got your address. It's got dollar values on it. It's not yours. I know that makes so many people mad. But that's the law. It's not yours. You've lent it. You have lent your money either to the banks, or in the case of stocks, right? You've lent it to companies. It's not your money. It's somebody else's. It belongs to somebody else. Social Security, if you've ever heard my commercial, listen, Social Security is a tax. I know I hate to say it, because, man, they really pulled one over on us. Of course, I wasn't alive in 1934 when they created Social Security. But it's just a tax. The Supreme Court ruled on that in the 60s. Believe it or not, you know how they ruled was because back in remember the McCarthyism? I know this is, going back in your history class, and some of you out there are like, yeah, I vaguely remember, back in the day I was pulling bong hits, so I'm not sure, right? Mr. Hand. Little Fast Times at Richmond High, Spicoli. No, that was when everybody was a communist, right? Remember? And one gentleman in particular who had been paying into the system for 20 years got thrown out of the country for being a communist. So he sued for his right to collect his Social Security. Hey, I paid in. It was my money. I should get to be, even though I'm not in the United States anymore, the Supreme Court ruled, it's just a tax. The government doesn't have to pay you if they don't want to. And they didn't. Yeah. So just food for thought. I always wonder if enough people left the country, would the government take away their Social Security benefits? If you become an expat, I wonder if they do. There's a couple of expats that I know. I'll try to ask them if they've lost their Social Security benefits. I don't know the rule to that. But if you get tossed out of the country, you won't be getting it. But that's what wealth insurance, it just protects you against all that other stuff. And especially in a world now, right? We look at whether it depends on where you live. Like if you're in Colorado or Arizona, maybe the suburbs of around New York, maybe not in the cities, right? You're not in San Francisco, you're not in New York City, but in the housing prices have gone crazy, just crazy. Stock market, the PE ratios are at all-time record highs, right? So we see these bubbles, we've seen them before, we know how they end, and that's why you have gold. Protects you when the bubbles burst. It's pretty simple that way. 800-951-0592. If you go out to our website today, you can listen to Jay Powell's Zoom call to the IMF. And in it, he was talking about the need for the United States to get it right and not necessarily be first. Of course, that's what I told you. We're not first. So that makes sense to say it. But in there he said, they still haven't decided. Wink, wink, nod, nod. Believe me, it's been decided. You wouldn't be talking about it at the IMF if you already hadn't decided this is what's going to happen. And let me tell you right now, if you haven't prepared before then, that's on you. It's coming much faster than you think it is. And it's something where this is what happens. And we've seen it over and over and over again throughout history. The Boston Tea Party had nothing to do with tea. It had nothing to do, what it had to do with, it wasn't about taxation. It had to do with fiat money. They conveniently don't teach you that, because if they taught you that, then you would have to be like, well, wait a minute, we have fiat money now. See, back then in the day, the colonists were told to trade their silver and gold for scrip, and that they could exchange the scrip with the merchants. Then one day the ships came in, and the guys that came to fill up their stores came with their scripts, and the merchant said, nope, we don't want the paper. We'll take some gold and silver, which they did not have. Yeah, I know, right? Aren't they devious? They're pretty good, aren't they? Wouldn't that been interesting if they would have taught you the truth in your textbooks? But, hey, when you have the power, and again, this is how vast it is. You think about today and Google and Facebook and Twitter and deciding what can be said, what can't be said, right? Same thing. They want to shape the narrative. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592, Patriot Radio News Hour. Joe Jaquin here on a Tuesday, Election Day, 2 weeks away. Of course, millions and millions. Last I saw, 30-some million people have already voted. It's kind of the new election way. I don't know. The way I'm thinking about it is maybe that we should do that all the time. Let the polls be open for like a week or something. I don't know. Maybe that's wrong. But I do think that people should have to go out and physically perform the act of voting with somebody present. I don't like the drop it in the mail. And again, there's just too many things that could happen in elections that are too close. We all know a handful of states is going to decide the election. And remember the Clinton-Trump race. A multitude of states. They were within 6,000 votes. It's not that many, But opening poll, like here, there's polling places that are open that you can go to and just vote instead of waiting for election day. But there's people there. They verify who you are and do all that stuff. I'm down with that. I am. I'm down with that. I would love it. Hey, instead of having it all on one day, hey, let's give people a week. Now, is it a little excessive? Maybe. Some states have been voting it seemingly for like a month. But anyway, the debate's coming Thursday, and none of it matters. Seriously, none of it matters. Now, I will say this. If Biden wins, gold's going to go up faster sooner. That's just my... Now, what evidence do I have of this? None. Just I've been doing this a long time. But either way, contested election, I'm not sure. I think gold runs then too, right? So Biden win, or we're not sure who won. It's probably going to be even more bullish for gold. Trump winning will have, I think gold still runs, but it'll be the least upside. How's that short term? Longer term, and by longer term, I mean in the next couple of years, gold's going through the roof. By the time the next presidential election rolls around, you will look back at today, the way people looked at $250, $300 gold. And I heard that a lot. When gold first ran, got over 1,000, people would call, I should have listened to Eric. I should have bought at 300. And we were telling them, listen, gold's not done at 1,000. it's just getting started. Now it's doubled since then, right? Since that happened, but now I'm saying, hey, guess what? That 4 times move, 250 to 1,000. We're going to see that again. I think we're going to see that in the next between now and the next election, a 4 times move in gold. And then I feel like either at the next election, right before the next election, right after the next election, I think that's when we get the change in the currency. But we'll all have to wait and see. That's pure speculation on my part. I'm telling you right now, I would be buying right now. I wouldn't throw it all at it yet. Wait to see. But of the 3 potential outcomes for the election, only one of them is less bullish, and they're all still bullish. But the other 2 scenarios, we could see gold really spike here, and I go back to E.B. Tucker saying, hey, listen, we're going to have $2,500 gold and $40 silver before the end of the year, and I think 2 out of those 3 scenarios, he could very well be right. So keep putting things away. Gold's higher today. Silver getting ready to cross $25. Copper at multi-year highs. Yesterday we had the big meeting. Now, I don't know how many more meetings we need to have, but yes, it was Pelosi and Mnuchin. And you think about this. $1.8 trillion was the offer from the Republicans. The Democrats were at $2.2 trillion. Everybody, hey, okay, simple. $2 trillion, let's go. They met yesterday at 3 p.m. Eastern time. They got closer. Today is another one of these quote-unquote deadlines. We'll see if it happens. I don't know. If they don't hurry up, here's the problem. All they really care about, just so you know, is they want to make sure everyone's got some money for Christmas. I mean, that's what it's all about. And they have to, and we know the Treasury can only go so fast. So you're going to hear again, after the stimulus passes, and whether it's before the debate on Thursday or after the debate on Thursday, I now believe it will be before the election. Because they need enough time. They need time to get the checks out. Which will be another reason why you're going to hear, see, if we just had that digital currency, we could have had it in everyone's bank account faster. So they're going to try to save Christmas. And we already know, listen, it takes at least 2 to 3 weeks. And as a lot of you out there know, hey, it took a lot longer for me to get it. Some people aren't going to get it in time. But they are going to try to save Christmas. I have no doubt about it. And I believe me, and as soon as that happens, baby, you're going to see, bam, silver's off to the races, gold's off to the races, and all this stuff, and they're just waiting. Right? The second they announce it's a $2 trillion stimulus, it's off to the races, so beat it. There's my advice to you. They are going to save Christmas one way or the other. Because if they don't, the only places, if they don't, here's where it's going to be left: Walmart, Target, Amazon, right? Those are going to be your choices. Might be your choices anyway. I don't know. 800-951-0592. I'm going to help you out. We've got an item today. We haven't ran it in 6 months. Maybe longer. I don't hold me. If we've done it in very, very small quantities. And I know we haven't run it in the last 3 or 4 months. 1/10 ounce American Gold Eagles. They've been unobtainium. I have some. They are all 2020s, which is even harder to get. So these aren't back dates. These are new issuance. 1/10 ounce American Gold Eagles, 1 through 49. at $237. If you buy a roll, there's 50 of them in a roll. You save a little money, $235. So a roll of 10th ounce would be $11,750. Right there, here you go. This is your fractional, your barterable material. I will tell you, a couple of months ago, 10th ounce gold Eagles were running, if you could find them at all, people were wanting $300, $350 a piece for them, and you couldn't get them. So 1 10th ounce gold Eagles, 1 through 49 at $237 a piece. 50 or more down to $235. So a roll of 10th ounce would be $11,750. U.S. Silver Eagles. I told you I would have an answer today, and I do. We did get some. I have about 40 rolls of silver. I had 50, but I've been selling them already this morning. I've got 40 rolls of Silver Eagles. Also, 2020s. They are at $625 a roll on Silver Eagles. So you got 2 items that have been extremely difficult to get. 1 10th ounce American Gold Eagles, and, of course, the 1 ounce American Silver Eagles. Of course, the Silver Eagles, they're 20 in a roll. So you're going to get 20 ounces of silver at $625. You know, at the height of this, remember Silver Eagles, $40 a pop. $40 a pop at the height of the pandemic because you couldn't get them, right? The mints weren't making them, whatnot. I don't know that this looks like, at least what the Bullion Bank has told me, and things should change, but it looks like this will probably be it for silver between now and the end of the year, unless somebody else, some other Bullion Bank doesn't sell their allotments and somehow we get more of them, because they are going, the Mint has already said they're going to close early and get ready for 2021. And I know you know how it is. There's going to be the big spike. I think that that's when you're going to see the Mint close, and you'll be locked out. So pick them up now. I think it's the right thing to do. I do. I think silver's going a lot higher. When you think about it, it's the only metal still hasn't hit a new all-time record high. I think that happens in 2021. I think we're going to see silver over $50 to the ounce. 800-951-0592. That is our toll-free number. If you've never ordered with us before, it's so simple. You just call the number. Brooke and Arlene are waiting patiently. There's 3 lines open right now. You just tell them, I'd like the special. And, of course, today, since we've got a couple of them, they'll ask you, which one would you like? Would you like the 10th ounce, or would you like the Silver Eagles? And you just tell me, I want the 10th ounce, or, you know what, I want the Silver Eagles, or, you know what, I want both. The next question is simply going to be, how many would you like? How many 10th ounce would you like? How many Silver Eagles would you like? It's really just that simple. We lock you in. When your order has been completed, we give you a trade number. That locks you in. Let's just say that at 2 o'clock in the afternoon today, they announced the stimulus. Gold jumps 50, silver adds another $1, maybe it adds $2. You don't pay anymore. You're locked in. You pay for your order. Most people will send us a check. You can put it on a credit card. We take all credit cards. There is a 2% credit card fee. So I'm going to eat 1% for you, but there's a 2% credit card fee. But you're locked in. Once we have good funds, registered, insured, U.S. mail. If you are here in Phoenix or you're up there in Colorado and you want to pick it up from one of our, we got an office here at the Deer Valley Airport. We got another office in Johnstown, Colorado. If you want to pick it up there, pay for it and pick it up there, you can do that as well. We do everything by appointment. We're not coin stores. You don't come in and browse around. People want their privacy, and that's what we do. So that when you're in here, somebody else isn't in here. doing your business. We don't do gold jewelry and things of that nature because that brings that unsavory element into your transaction. So it's gonna be very private, and you'll be able to do your business, get in, get out, very simply. After that, we don't call you. We don't sell our database. We don't do, I mean, once every, 5 years, if that, we may send you a piece of mail. Maybe. I think we've done it twice in the 17 years I've been here. So we don't call you unless you ask us to. We just don't do it. It's super simple to do it. We've been doing this now for almost 20 years, 24 years, almost 25 years we've been doing this complaint free. Why? Because we treat everybody with honesty and respect. We don't rip you off. There's no bait and switch. We do exactly what we tell you we're going to do. Patriot Radio News Hour. We'll be back right after the break.
Yes, ma'am.
800-951-0592, Patriot Radio News Hour. We got a couple lines open, already halfway through the silver. So if you're looking for Silver Eagles, they're $6.25 a roll. We got about 20 rolls left there. The 1/10 ounce American Gold Eagles. I will tell you, the Bullion Bank has told me this is definitely it for 10th ounce. There will not be any more after they've sold out of that allotment. So 1/10 ounce American Gold Eagles, 1 through 49 at $237. If you buy 50 or more, they come in rolls of 50. Take them down to $235 a piece. And like I said, the U.S. Silver Eagles, rolls of 20 U.S. Silver Eagles at $625, 800-951-0592. And, we're talking about the banks, right? We know third quarter earnings, just like I told you, miraculously, no write-downs. They all, we beat the street. We beat it by this or that. And we didn't take any loan loss reserves, but that's okay. Of course, we know why. Because, you view our central bank as kind of like a firefighter. And think about the forest fires that we've had raging in California, Colorado, the two largest fires in the history of the state, burning up everything. And the firefighters are out there, right? They got their shovels, right? They're out there with their shovels and they're scooping up little piece, a little bit of dirt and trying to throw it on the fire, right? Trying to put it out. They got no chance. That's exactly what's happening. They don't want you to believe it, right? So they create asset bubbles, right, to kind of buy time. But now time is starting to run out, right? They've already said, hey, you better hurry up with trillions of more dollars, right? They're all on record. We need matter of fact, they've already said, listen, after this $2 trillion, we're going to need more. The central bank has already said that. On top of what they're doing, everybody knows. There's no such thing as a free lunch. There isn't. Somebody's going to pay for it. And how it always happens. Go back to 1933. Right? What happened? Who paid for it? Who paid? The citizenry paid. They took our gold away. And then 90 days after they took the gold, they raised the price to $35 from $20. Now look at this. The same $20 gold piece. It's like $2,100 plus today. This is how bad of a job they've done. In less than 100 years. They took something that was worth $20. What are they? And now I'm selling them for $2,150. Would you call that a good thing or a bad thing? Most of us would be like, that's not so great. That just means we're paying a whole heck of a lot more. And those, oh, well, wages went up, but they know wages aren't keeping pace. How about all of you on Social Security? How you liking it? Did it work out the way you thought? Every year that goes by now, every year from here till the money collapses, you're getting a pittance. Anywhere from zero, I guess one time you got 2%. This year you're getting 1.3%. So what the central bank is telling you is nominally we're giving you more money. Actually, you've got to make do with less. And every year, it's a little less, a little less, a little less. Right? When they talk about inflation, now they're saying we need more than 2%. And I just laugh because when they came up with this stupid rule, right? And remember, they just made it up. There's no rules in the textbooks at Harvard and Princeton. They didn't teach this at economics at the University of Chicago. Oh, no. It's made it up. Yeah. Hey, 2%. See? Because 2%, that doesn't sound like a lot. It's just a little bit. See, but, of course, they don't say, well, it's 2% every year. And then, of course, by the way, we're going to manipulate the number to make sure it's never that high. So we can say we still need more, even though actually it's really at 8%. Oh, and pay no attention to the shrinking middle class in America. Pay no attention to the millennials living with their parents. Pay no attention to the millennials who, if they don't live with their parents, rely on their parents to be able to not live with their parents. And I go back and think about, all of this nonsense really went full scale after we went off the gold standard in 1971 when we told foreign governments, you can't trade our treasury notes for gold. Back then, credit cards didn't even really exist at all. There's no credit card debt. There's no such thing as credit card debt. Didn't need credit card debt. Things weren't that expensive. Dad worked. Mom stayed home and raised the kids. Now all of a sudden, now fast forward to today, in 50 years, Mom and Dad both work. Our kids are on our health insurance until they're 26 years old. They could never leave the house. I mean, back when I was growing up, you graduated high school, you were gone. Heck, some kids didn't even wait. They didn't live with their parents in high school, junior or senior year. And you can do it. You can get an apartment by yourself and work a full-time job. Can't do that today. It's impossible. And this is the devaluation that they've been laying upon us all. How did it happen? Because you can think about, I don't know what the minimum wage, I think it's like $12 or $13 here in Arizona. In the 70s, this is like a buck and change. My first job was 1986. $3.35 an hour. And you could move out of your parents' house on $3.35 an hour. You could do it. Every year that goes by, it gets worse and worse. But that's why you put the gold away. Think about it. Gold was $42 in 1971. Yeah. We're doing pretty good. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. In the last 4 years, the deficit is up $7 trillion. And we're days away, maybe a week, maybe today, from adding another $2 trillion. So that'll be $9 trillion. I mean, by the end of the year, the debt will be up $10 trillion. Go to Inauguration Day, and it's incredible. You're like, wait a minute, that's $2.5 trillion a year on average, and rising. Now they're going to tell you this year 3.1 is going to be the number. $3.1 trillion. Now remember, back in their little textbooks, I know you got to go way back to the 70s and the 80s when they said, a little debt's okay. That's how it always starts, right? Well, a little bit's okay. We'll pay it back later. A lot of us out there, right? I don't have it, but I've had it in the past where I've had some credit card debt. And then when things got better, I paid it off, But it happens out there. A lot of Americans, it's permanent. That's kind of like what our central banks decided to do. And our government has decided, we'll put it on the credit card. And don't worry, because when the credit card balance gets too high, I'll get another offer in the mail. And then I'll put some on that credit card. And then when that gets, I'll get some more. Next thing you know, right now, the federal government, we got like 20 credit cards, and they're all maxed out. They're all maxed out. And now the central bank is monetizing the debt. We're cascading through everything. A lot of people out there, housing, it's red hot. It is. Is it sustainable? How is it red hot? How is it possible that we have the lowest rates in history right now? Because I'm going to tell you right now, I actually know some people buying a house right now. It's like murder. Buying a house is always stressful. And everybody, if you've ever been through the process, you know what I mean. But now it's even worse. The banks, they really don't want to do it. But, the central bank will buy the debt from them, so it'll be okay. But the central bank is creating another bubble. They keep buying down mortgage rates to try to give you the illusion that the house is really worth $500, $600, $700, $800, $900 million. Houses that used to be $140,000, $130,000 in 2000 are now magically supposed to be worth $400,000 or $500,000 today, because they are trying to again give the illusion that there's prosperity here, because they got to make that debt worth more somehow. But now where do they go from here? Right? They've played their card. The problem is, if interest rates just bump up 0.5%, heaven forbid 0.75%, it's over. It's over. Be careful out there. Make sure, listen, I'm not telling you to put all your money into gold and silver. I'm not. But you better allocate, and whatever you've been allocating, I would be increasing that allocation. I think my uncle had the greatest advice to everybody. You better have an ounce for every year you've been alive. And an ounce for every year your wife's been alive, an ounce for every year your kids have been alive, your grandkids have been alive. That's the best thing. I mean, I would say, hey, what's the minimum? To me, that's the minimum. That's the minimum. Anything over that, hey, that's just gravy. We're sitting there and we're trying to figure out what comes next. If we've add $10 trillion in 4 years, what do you think we're going to do the next 4 years? What do you think it's going to be? Well, you think miraculously somehow it's going to be less? Right? We just added the real number, by the way. We added just under $4.5 trillion to the debt. I know they'll say 3.1. I won't bore you with the details, but it's really almost 4.5 trillion in a year. And even if the interest is a little bit, you got to pay interest on that stuff, and the debt just rolls over and rolls over and rolls over. Go back 20 years ago. You know how much debt they rolled over a year? It was like a couple $1 trillion. That was it. Now they're rolling over close to $10 trillion. The problem is in the next 4 years, they're going to be rolling over about 15 trillion, right? 10 years from now, they're going to be rolling over 30 trillion a year. And this is why, when you start thinking about it, what does that mean? We've papered the world in debt in dollars. This is why China's emerging. Yesterday, I broke the news to you. The IMF finally admitted, I've been telling you this already, China's been the largest economy in the world in terms of stuff for a while now, for at least the last several years. But now the IMF says, okay, we got to admit it. Their economy's bigger. And right now they're saying it's 1/6 bigger. Over the next 10 years, China's economy is probably going to be twice as big as ours, which means they're going to want at least twice the amount of stuff being bought with their currency. It's a bad period. Listen, we're going to get through it. I promise you we will. I think we're going to get through it by eventually going back to the gold standard. But between now and then, get as much as you can put away. 1/10 ounce American Gold Eagles, $237. Buy 50 or more at $235. And the last remaining rolls of Silver Eagles, baby, for the rest of the year at $625. Patriot Radio News Hour, final segment coming up. 800-951-0592. I'm going to leave you with this one. Another day, another major Wall Street banking firm admitting guilt. Goldman Sachs paying $2 billion, which massive. But somehow, because hey, we'll pay you $2 billion, but you don't press any charges against us. This had to do with them ripping off Malaysia. I don't know if you remember that case. It was a few years ago, but apparently Goldman Sachs is going to pay $2 billion in penalties that allows the bank to avoid all criminal penalties, i.e., we will not charge any of the executives at Goldman Sachs, even though it has widely been reported that the guy at the heart of the case, where is he? Tim Lazier, was cooperating after Malaysia caught them ripping them off. So if they're ripping off Malaysia, they're ripping off you. Implicated most of the senior management at Goldman, saying, yeah, this is how we were taught to do it. And here's everybody that knew it. Here's all the proof behind it. Goldman Sachs will not be prosecuted at all. The only thing, Lloyd Blankfein, he retired. Now, he retired like a year and a half ago, but they're saying that was kind of the, okay, don't send us all to prison. Lloyd's going to retire. He gets his golden parachute, and we'll pay $2 billion. Let's move on. Again, this is a crooked system. It's actually designed not for you. And I've explained this over and over again. Most people, they just don't want to believe it. And I get that. I know. I get it. I do. You don't want to believe it. That's okay. But you know I'm right. I mean, between our federal government and our central bank, the two deficits at the end of 2021 going to be like $45 trillion. Right? I mean, already, listen, we're already in fiscal year 2021 for as far as the federal government is concerned, and we know we're going to have a debt by the end of the year of somewhere between 3 and 4 trillion. Still got another 9 months to go. Plus the central bank and all the stuff they're buying. I mean, it's insanity. It's insanity. It makes no sense. Matter of fact, it could be 40, 50 trillion. It's probably more likely. It's incredible. Then what happens when nobody wants it anymore? What happens when it's like, wait a minute. Wait, you got $50 trillion in debt and you only want to pay me 70 basis points for 10 years? Nah, no thanks. I mean, I'll do it if you give me, I don't know, 3%, 4%, 5%, 6%, 7%. Of course, that would just take the debts, right? Instead of doing 4 or 5 trillion a year, right now, every 1% of debt is going to, or interest, 1% of interest will now amount to $500 billion of debt added on per year, every year. And growing, because the debt just keeps growing. Put it away. Put that gold away. Put that silver away. Do it before. I don't know if it's going to happen today or not, but I do know this. It will happen soon because they want to try to save Christmas. Make sure you put some gold and silver away before that stimulus happens.